Hey there, welcome back to my channel, it's me the Mind Injector. In this video we've got a fascinating story that's been grabbing headlines in the electric vehicle world. NIO, the Chinese premium EV maker, has been through quite a roller coaster ride. From soaring to astonishing heights, to dropping down to a price point that's almost where it all began. But don't click away just yet, because NIO's journey isn't just a simple rise and fall story. It's filled with twists and turns, challenges and potential. The big question here is whether NIO could be the next Tesla. Intrigued? Well, hang on tight because we're diving deep into the electrifying details in this video. To truly understand NIO's roller coaster journey, we need to dive deeper into their history. In 2018, when NIO went public, they began an electrifying journey in the EV market. Their shares started at a modest price, but quickly soared to incredible heights, hitting $62 in 2021. However, NIO's story isn't one of constant upward trajectory. It's marked by its share of twists and turns. The Chinese EV market, once viewed as a land of opportunity, experienced turbulence this year. Its growth started to slow down as economic uncertainties cast shadows over the market. NIO wasn't spared from these challenges. They grappled with inflation, faced supply chain issues, and reluctantly entered the EV price war initiated by Tesla in the previous year. What makes this price war tricky is that NIO can significantly lower their prices without jeopardizing their premium brand image. While they're maintaining this delicate balance, these challenges are putting immense pressure on the company's profit margins. So, what's been happening recently with NIO? In October, they delivered 16,074 vehicles, marking an impressive 59.8% increase year-on-year. This brings their total deliveries for the year to 126,067 vehicles, a substantial 36.3% rise. While these numbers are undeniably impressive, NIO still isn't projected to turn profitable anytime soon. This is a significant twist in their journey. The real excitement comes from the broader EV market in China. In 2022, nearly 6 million EVs were sold in China, representing over half of all global EV sales. Here's the kicker. That figure is expected to more than double by 2030. The growth runway for EVs in China is incredibly long. But there's a catch. NIO isn't the only player on this field. Tesla already boasts a massive gigafactory in Shanghai, contributing to the increasing competition in the Chinese market. The reality is that NIO faces fierce competition day in and day out. To stay ahead, NIO has focused on innovation, particularly with their battery swap stations. These stations provide NIO drivers with the convenience of swapping a depleted battery for a fully charged one in just a few minutes. They've expanded their network to 2,079 stations globally, with 621 of them strategically located along Chinese motorways. What's even more fascinating is NIO's recent release of the world's first smartphone designed for EVs. This smartphone allows NIO owners to instruct their cars to drive autonomously to their location, a feature that's allowed in China within certain parameters. This raises an important question. Can NIO be the next Tesla? Despite impressive delivery numbers, NIO did record a net loss of $2 billion last year. To achieve Tesla-like returns, they'll need to demonstrate a clear path to profitability. Their journey is filled with challenges and uncertainties. This year has been a challenging one for NIO investors. While competitors like XPeng, BYD and Li Auto have posted strong gains, NIO's stock is down by 26% year to date. It's a stark contrast to their previous soaring success. But there's an interesting twist to the story. Wall Street analysts believe there is potential. Out of the 13 banks covering NIO's stock, the average target price is around $14.24. with the highest target at $19.20. That's a potential upside of 19% to 160% from NIO's current price. NIO's recent delivery numbers indicate optimism. In September, NIO delivered 15,641 EVs, marking a nearly 44% year-on-year increase. For the third quarter overall, they delivered 55,432 EVs, a remarkable 75.4% improvement. This news led NIO's stock price to rise to $9 per ADR, although it has since faced challenges, especially after Tesla reported disappointing third quarter results. Analysts generally agree that while NIO is a risky buy at the moment, sales are expected to increase over the next year. However, the real challenge lies in profit margins, which is why NIO's share price has dipped. Here's where the real distinction comes into play. While Tesla focuses on producing budget EVs for the mass market, NIO has set its sights on luxury EVs catering to a higher-end customer base. This approach provides NIO with more flexibility when it comes to profit margins. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up now using the link in the description and get those free stocks. Now, let's get back to the video. But here's the big question. Can NIO manage to steer its ship through these turbulent waters? The company is still in the red, which means their potential success hinges on funding and cost management. They have recently raised $1 billion, which is a significant factor in their journey. However, they need to be strategic with their funding, especially because a sudden rise in stock price could make their debt look expensive. To keep their costs low, NIO has made some strategic changes. They've eliminated unnecessary roles in showrooms, such as product experts, and have increased sales commissions for showroom staff. They're also expanding their dealer network in Europe. NIO isn't stopping at just making EVs. They are exploring creative ways to maintain customer loyalty and boost product margins. They've introduced their own smartphone, and they've entered the insurance business. The goal is to provide better priced, higher margin insurance products tailored to their range of sedan and sports vehicles. Recently, there's even been talk about NIO purchasing some of its manufacturing plants. This presents an intriguing development, especially since it's in the same province as the recent insurance acquisition. The big question remains: is NIO the next Tesla? It's a journey filled with challenges and uncertainties. NIO has the potential, but they need to show a clear path to profitability. Their journey isn't straightforward, but it's one worth watching. From a trading perspective, the current price might be a good entry point with a tight stop. However, the possibility of new lows can be ignored. But for the long-term investor, this could be an opportunity waiting to be seized. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.